Welcome to the Abundant Accountant Podcast, where all accountants come to learn all the ways to grow your firm. And when you're in doubt, I am here to help you out. So if you're ready to learn and ready to grow your firm, then you're in the right place to sharpen your skills and increase your revenue. Welcome to the Abundant Accountant Podcast. This is another bonus episode. Yep, that's right. The Abundant Accountant Podcast is for you, where accounting professionals come to learn all the efficient, powerful ways to grow their firm, sharpen their skills, and still have increasing revenue during these trying times. So today we are covering KPIs. We also cover topics from pricing, finding your ideal clients, cash flow, setting boundaries with clients, and so much more. So you can really show your clients your expertise, never give any of your knowledge away for free, and get paid your value. So now, before we welcome our very special guest to the show, I also want to share that I have an upcoming 8-week sales mastery class starting in the summer of 2020. So this has only been available for my high-end clients before, but I'm excited to share this with others. I am giving you a free coaching session as long as you've had your accounting firm for 2 years. And this is where you can really learn how to build that dream practice of the clients that you really love so you can have more time with your family and your kids, or maybe you've had too much time with your family and kids lately, and you really want to focus on serving your clients. So if you're frustrated and stressed about getting the right referrals, and you really have no control over who you're working with and you take on every single client, then make sure to head on over to theabundantcall.com to book a call with yours truly, me or my partner, Denise. So once again, head on over to theabundantcall.com. Today's episode is brought to you by Xero. As an accountant, when you join Xero, you'll gain access to a full range of practice management tools so you can manage your practice and your clients from almost anywhere. To learn more about building a better practice with Xero, visit Xero.com. That is Xero.com. And now let's welcome our very special guest to today's show. His name is Mike. He's a CPA out of North Carolina. He has a very successful firm and helps on very complex financial issues in several different situations, including divorce settlements, forensics, business performance and valuations, and many other services. He has 3 kids, a wife, and only works now 40 hours a week. Let's welcome Mike to the show.
Hey, Michelle, how are you doing today?
I am awesome. Thank you so much for being here with us again on the Abundant Accountant Podcast. It's always great to have you. You always have so many great stories, and today we're talking about a really, really important topic. So before we dive into today's topic, can you just share with all the other accounting professionals listening who you are, where you live, and, the firm that you've built up today?
Yes, my name, of course, is Mike Meilinger. I'm a CPA. I have a CPA firm. Currently we have 11 employees. We service about 75 customers. Most of our customers are either fall into 2 categories. They're high income business owners, probably between the age of 50 and 65. And then we have what I call young entrepreneurial mindset businesses. So these guys are the guys that start pretty much that are growing very rapidly and doing, I think, some amazing stuff. So they're fun to work with, but they're full of energy and things like that. I've been a CPA now since 1995. So that's a long time. I don't even want to figure out how many years that is.
Wait, you just got started. What are you talking about?
The current firm, I've had several iterations of my firm, and my current firm has been around since about 2007. And started out as a litigation firm where all we did was work with lawyers and do business valuations, did a lot of divorce work. Because I'd sold a previous firm, I couldn't really do traditional accounting work until about 2011. My current firm, we started really growing in 2011.
Awesome. And 75 customers, your revenues are upwards of what right now? just so everyone has some context around this, because today's topic will help you increase your revenue.
Yes, we're currently we're hoping to hit 2 million in 2020. That's our goal. So our trailing 12 is around 1.8.
Got it. All right. So 1.8 million is your trailing 12-month revenue. And I know this just doesn't happen. And people are wondering, well, Mike, how do you do that just with 75 clients? So today on the Abundant Accountant podcast, we are going to have a very, very important discussion of one of my favorite things to track, which are your KPIs, your key performance indicators. So that's what we're going to dive into. Mike, if you were to define what a KPI is when you first heard the term and someone said, you really need to track this if you want to grow your business and make it more efficient. Number one, what'd you think about that when they told you that? And then also, how do you define it to your peers so they know, okay, got it. That's the definition. Now we can go into which ones we should analyze.
Well, of course, like most accountants, I've always just thought of it as a term and threw it out, right? But to me, if we really wanted to use, what a KPI really is, it's a clarifier. And what I mean is it clarifies what's going on in your business, right? There's all sorts of definitions, but, and there's leading KPIs, right? KPIs that you should be looking at on a regular basis that will tell you exactly how your business is going to do or give you a good indicator of your business. And then there's KPIs that are lagging, and you've got to look at both of them, right? And a lagging one is something that you measure on a monthly basis or a quarterly basis that it clarifies, it's really clearly presents your business.
Mm-hmm. And why are KPIs important? I know we're going to talk about a few things around KPIs, but if you had to summarize it and share it on how it became probably the number one thing you look at in your firm and how you grew it to, over almost 2 million, hopefully by the end of this year, why is it important? And how did you realize that that was the important thing that you needed to fix in your firm? Like, share with us that story from, maybe 2011 to now.
Well, one of the things we talked about all the time is that business owners, we like to lie to ourselves, right? We like to think everything's going well. And then we also like to manage on what we think's going on, right? So I think KPIs are really important because, first, to profitably leverage your business, you have to understand the key performance indicators of a professional service firm. If not, you're going to do what I did, and you're going to hire people and not be profitable. And you're going to wonder why you're not making money when you have employees, right? So that's one of the biggest things that I try to tell people. If you don't know your numbers, you can't leverage your business. If you can't leverage your business, you're always going to have a job, right? And the thing about CPAs, and I'm one of them, is we'll work hundreds of hours and not get paid, right? But the sad thing is your employees won't do that. You have to pay them, right?
Right. The employees won't just work 60 to 90 hours a week and say, oh, I'll get it paid in the future one day.
Right. And, one of the things we've always discussed is limiting beliefs. And one of the limiting beliefs CPAs have is I can't afford good help. But I don't know if it's that they can't afford good help, is that they work the people to death and don't pay them. And they would make more money at Costco sometimes than working in the CPA firm and have, 40-hour work week. So if you want to leverage your business, you've got to understand your numbers and you've got to understand the key performance indicators that we're going to discuss today. Also, if, like my firm right now, as you grow and you've doubled over the last 3 years, your KPIs will indicate if you're growing healthily or if you're not, and how to manage the administration of your firm. So KPIs ensure that you grow profitably, or they enable you to quickly adjust your staffing in order to grow profitably. And then, of course, the biggest thing is it creates clarity in your business. And once you get clear on like the numbers, what they should be and how they should look, then things will fall in place and you'll do the necessary things to get the business that you want, right? Not the business that just happens, but the business that you really want, right? And to do that, you got to have clarity.
Well, and I think clarity is really, really important. But I mean, maybe Mike, you can go back to 2012, 13 when you were running your employees out the door, working them so hard, not paying them enough. People are inundated with the amount of work they've got who are listening, especially now. We're going to be either, in a recession, entering one. It's tough times out there. Accountants are that's like the number one phone call most business owners are making right now, because everyone is so confused with everything. And like you said, you have to have clarity. So when it gets tough for you, how do you make sure that you still manage and monitor your KPIs on a weekly basis?
Well, really, there's one number that every CPA should manage, right, on a weekly basis, and that's the utilization, right? Your utilization number is really, it's a leading indicator of how efficient your firm is. Going back now, Michelle, back in 2007 and 8 was when we had those employees, or the first firm that I sold. The reason I sold it was because of all that stuff. This firm currently, we work on average now, last week because of the loan we had employees work 50 hours, right? Because we had to work Saturday to get some loan packages in. But that's the first week in the history of the firm that we had really, one, a mandatory Saturday to work, and two, we had the average employee work about 45, 50 hours. The biggest thing I've struggled with is, how do you work a 40-hour work week? How do you keep your employees a 40-hour week, right? And compete effectively with the larger firms that are working people 60 to 70 hours a week, right? And that's why the KPIs are important to me, because, I have a team that I'm very thankful for. We don't have a lot of turnover. In fact, we really don't have any turnover. But, the competitive pressures out there are what they are. So that's why it became really important to me to measure the KPIs and hold our team accountable for those, because every business should give each employee one number, right? And it should be very clear what that number should be. Like, so if you have a biller, right, someone who's productive, in our firm, the number is 80%, right? We want our billing staff to stay 80% billable, right? Now, they don't always get that, but that's the target, right? And then overall, we want to have a utilization rate, when we take everyone into account, of about 60%. Because the biggest thing, so when we start thinking about other KPIs, I might be getting ahead, but one thing that CPAs who want to grow their business should track is how much of their time is billable, right? And most CPAs don't track their time, or a lot of people don't. And I'm going to give you a really weird answer, is you shouldn't be spending more than 30% of your time, if you're the owner of a CPA firm, in a billable role. And it should only be in value creation and not in doing the work, right? And your goal, so because if you're spending 60 to 70% of your time, or if you're billing, let's say you're billing 30 to 35 hours a week, right? You're probably working 60 to 65 hours a week, but you're really, the highest rate, and you teach this so well, the highest hourly rate that you can make is meeting new prospects or meeting with your current clients and offer them additional services that are profitable.
The sales stuff, huh, Mike?
Exactly. That's the highest. That's where, salespeople are the highest paid people in the world. And there's a reason, okay? Because it creates value. Of course, my next goal for my business is where I'm not doing any selling, right? So the thing is how do you create an automatic sales system? I'm not even close to that yet, but it's a goal. It's a goal.
So what about that limiting belief? Because there is a mindset shift that has to occur in order to even see this as a possibility. Because, and a CPA might be listening and, Mike, this sounds all great. And, I wish I could spend only 30% of my time on billable work and 70% on value creation, and having my staff be efficient at 80%, but I can't afford good help. There's no way I can pay them. The turnover's too high. How did you make that shift that you could share with someone listening today so they can go and implement this in their firm immediately?
Well, I wish I was as intelligent as I sound, but unfortunately, it did take me a while of banging my head against the wall and almost getting divorced to realize this. I mean, to go back really quick, Michelle, my first firm, I started out of my house. My wife just asked me if I could make the house payment. And within 2 years, I was working 80 hours a week and probably making $40,000 a year. Sometimes I'd clip 100 hours a week and had really bad employees and everything. And I'm going to be brief on this. Almost ended up getting divorced, right? And it was just a real traumatic experience because we had 3 kids and this and that, and really changed my perception. I merged with another CPA firm, another CPA who had a vision. And it was funny because I even made him hold the stock in escrow because I didn't think he would want me as an employee. Well, the first thing he did was double everything I billed. So my firm instantly went from maybe it was 150 in revenue at that time to 300,000. And of course he kept me because I could actually meet with people because not one client left, right? So that was my first introduction to that. But when I tell you, you've got to start and you got to have a vision, right? So the thing is, there's an old saying that says the best time to plant a tree was 20 years ago. The second best time is today, right? So the thing is you got to start measuring and tell yourself the truth, right? And then the truth, and then set a clear vision for what you want, right? And your KPIs should be part of that vision, right? If, one of the things we'll talk about, one of the significant things, when we talk about utilization, there's also this thing that every CPA can track, no matter if they track their time or not. And it's just the average hourly rate, right? You take the revenue of a firm and you divide it by the total available hours. And every month you measure that. Every trailing 12, you measure that. So you back out the time off, paid time off and holidays. And, that's a really good performance indicator that will tell you how your firm is measuring, right?
And you're adding yourself in there for 30%.
You add yourself for how many hours you work because you want to know out of all the total hours available, what your hourly rate is. So we put like 40 to 45 hours for me on that. But as long as you're consistent, that's the biggest thing about KPIs. If I could say one thing is you can be doing it wrong. But as long as you're doing it consistent.
Do it wrong every week and every month, and you'll be good to go.
Right. Well, the measurement will be there, right? The measurement will be the same, and it will show you an increase and decrease. Where people run into problems is they're not consistent in the way they measure it, right?
Yeah.
But, utilization is one, average hourly rate's one, because one thing that people realize once you start getting into employees is they tend to take longer than you do to do a job, right? So you might price a job and say, yeah, it's 5 hours. I'm going to, and you don't like pricing stuff by hour. You might put a flat fee. Let's say we put a flat fee out there of $2,500, right? Okay. And you might think, well, that should take me 5 hours. So I'll make $500 an hour, but you want to leverage that, right?
Right.
So then, you get an employee to do it and all of a sudden it takes 20 hours, which still okay, counts what you pay to employee. It's $125 an hour, but you need to know that, right? Because the thing is, what I have found as I've experimented with flat fee pricing and moved into the flat fee pricing, people ask me, how can you price so high? And it's like, I know what it costs because, guess what I did? I priced stuff wrong.
You learned the hard way. What did you figure it out? Like when you used to price stuff, did you have to double it, triple it? When I was always doing stuff with my last company, I learned that if I thought something was going to be, cost 10 grand, it really is 20. If it was going to take 3 months to do, it took 6 months. I always went with the, 200% of whatever you think.
That's a really good rule of thumb because the thing is you should always probably double what you think the price is because I've learned that, and then, sometimes that's wrong too, because, in professional services, when you do a flat fee, right, you're always going to have a little, what we call engagement creep, where the client asks you to do stuff and you don't want to be, like I said, you don't want to be a nickel and dimer, right? Where you're like, okay, whatever. And then there's engagement, which is one of the worst things I do, seep, right? Where I am actually going outside the engagement and doing stuff, right? So the thing is, and you want to be careful of that, but you always got to take into account there's going to be some of that, right?
Yeah.
Because people are going to ask questions, people are going to do stuff, and you've got to build in pricing to have margin. So if there's a little seep or creep, it doesn't kill your realization, and it doesn't put you into a situation where the cost of paying someone to do it, is not covering, after you pay your labor, you're not covering your overhead or something like that.
Yeah.
So I'll tell you a story.
Yeah, let's hear a story. And I want a story on what's the difference between seep and creep. What's engagement seep and what's engagement creep, and what's the difference? Because they both sound creepy and seepy at the same time.
So engagement creep is just a little subtle difference that I just learned recently, but it really makes sense. Is engagement creep is when the client asks you to do something that's outside of scope, right? So a good example is we have a lot of fixed price agreements based on, we went through the certified tax coach, and I really liked her program. And so what we'll do is a flat fee tax plan, and then we'll do a tax maintenance plan, right? Mm-hmm. And the tax maintenance plan, we've learned, is really pretty strict, and it defines now what's out of scope. But, all of a sudden they sell the damn business, right? That's a whole separate tax planning engagement. And I will probably start, I've never been a big believer of audit insurance until recently. Been a couple audits that we got no change, but that cost the client a lot of money. But, audits are something outside of scope. So all of a sudden you get tied up in something, or complicated tax notices. We usually will include tax notices, and we'll say that are less than an hour or so, stuff like that. But those are engagement creepers. Engagement seep is when you've got such a good fee on the client that you might guilt yourself into doing something extra. You know what I'm saying? You priced it too well, and you just got to screw yourself, right? That's probably my number one. What I've learned is the number one thing that I have to be careful of.
Because you're really generous with all of the services, and you have your own terminology for what you call yourself, but yeah, being really careful on engagement seeping, because otherwise clients might start to do their engagement creep on you, because they're like, wow, Mike keeps helping with this. Now we've got the audit. He's doing that. He's not charging me. They're getting a good deal.
Well, a good example is I'm one of these guys that just jump in and do something, right? And so I heard about outsourced accounting, and I was like, that sounds like a really profitable thing to get into. And I had a client, not a good client, and all of a sudden her bookkeeper quit, and I said, well, we'll outsource it. What were you paying the bookkeeper? Oh, we could do it for half that. It was probably, I'm embarrassed to say, it was $900 a month or something. But the problem was, and you can do some outsource, you can actually make good money on like a small business with an outsource engagement of $900 a month. Sometimes I got a couple clients we get like 120%, 130% realization on. But this lady had cash flow issues. And so if anyone's interested in getting outsourced, never outsource people with major cash flow issues. Well, I looked at the billing one month, and we literally had $10 an hour. So let's just say it was $1,000. I'm probably lying. It was probably less than that, because I just try to hide the pain a little bit. My realization was $10 an hour, i.e. we had 100 hours of an employee that I paid over $20 an hour. Just paid. That was just not payroll taxes, not overhead.
You could have definitely made more at Costco.
Yeah. So the thing is here's the thing too, and this is what I encourage people is, and that's why, I think mindset's so important. We learned a lot from that. And, now we price those engagements a lot better. If someone has cash flow problems, we don't do the outsourced, right? We say we can't do it. You know what I'm saying? So it was, a really learning experience, but you don't want to learn like that. And it was terrible because the client wasn't even happy. She got mad at us because, it was ridiculous. She was like, why aren't you paying my bills? And we were like, you don't have any cash. Well, that's not, and I was like, so the thing is, so it was like this really bad situation where we were doing all this work, not getting paid, and the client was still unhappy. So that's what I think where your key performance indicators are so important, because sometimes, there's some rules. I was talking the other day about mindset with Colin Dunn, and not all clients are good clients, right? You know what I'm saying?
Oh, yeah.
And some clients are really bad clients. And, you've got to identify them quicker. And then you've just got to have a point of truth with them where they can no longer be a client unless they meet certain profitability measures. And we had that meeting with the client and we handed the accounting back to her. And it was a great situation, but we really learned a lot on that engagement. But it had bad pricing, okay? It had engagement creep. It didn't probably have it where we were managing cash flow on like a daily basis, right? Wow. You can't do that. So, but yeah, I'm gonna have to lay down after talking about that engagement. That was a bad.
You're having bad memories come up right now. So, Mike, what other KPIs do you track on a weekly or monthly basis that we haven't talked about today that someone listening, should be thinking about? And maybe you can relate it to, especially right now, because as the times have shifted and everyone's businesses are shifting, and I know accountants are so busy and most of them are thriving right now that I've talked to personally. But as this, whatever you want to call it, comes or has hit recession, you choose the word, what other KPIs in addition to utilization, average hourly rate, do you think one should track, and two, how they should track it, if you've got any insight on that?
Okay, so the most important one is utilization, if you can track that, because that will tell you, that gives you a lot of numbers that you need, and that's the percentage of time that your employees are working on billable stuff. Because if you have utilization, then you realize that, let's say you have a 50% utilization rate, you pay someone $30 an hour. Well, it's really costing you $60 an hour, not counting benefits and everything else, for every billable hour that person gets. So the second thing is it's a lagging indicator, but it's real important to look at this and look at your clients on a really monthly basis, is what we call realization, which is, I know you billed 100 hours, right? And the 100 hours should have been 20,000, but we only realized 80%. So that would be 16,000, right? So, so there's utilization, which is, hey, how busy are realization of what you do, what percentage am I billing based on my standard hourly rates. We talked about the average billing rate, which is real easy to calculate. One thing, especially in the recession, you need to know your average hourly cost, which is real easy, okay? And you can do it at two levels. You can take your total hours available, right? Divide it into your total cost before your compensation, right? So this way you know what it costs you an hour. And then you could also, one thing I always do is take all the total billable hours, right? And I divided my total cost by that, and that gives you your cost per billable hour, right? So this way you don't do stupid things like price an outsource engagement at $1,000 or $800. That's, what I'm saying? Because right. The thing is, you know what it costs, because your cost per billable hour, when you start adding computers, overhead, stuff like that, is much higher than your employee cost. To give you an idea, what we come as a bookkeeper here in South Carolina that we pay maybe $21 an hour, $22 an hour when we add benefits and everything, and we took the utilization of 75%, it comes to just a raw cost of about $36 an hour, right? And then if you add your overhead, I think our overhead's probably like $25 an hour. So you're talking, a bookkeeper might be costing you $61 an hour all in, per billable hour, right? And you're thinking you're making a lot of money at $100 an hour,
right?
And you're not, right? So the thing is you just got to be really cognizant of those numbers. Gross profit, another good one for people who don't track anything is revenue per employee, right? So you figure out how many full-time equivalents you have. So if you have part-time employees, you take their total hours and divide it by 2,080, and that will give you a full-time equivalent number, right? Mm-hmm. And then you take your full-time equivalents and you divide it into your revenue. And you want that number to be at least, and this is low, 125,000. So if you have you and two other employees, you should be at least doing 375. Ideally, you want 200,000 per employee. So anything above 125, is, I don't want to say acceptable, but you want to, that's a number that you need.
Good target.
Okay?
It's a good target.
That's a minimum target.
Minimum target.
A good number would be 150. A great number would be 200. And there are some people that once they get the fixed pricing and get the sales side down, they're getting 250 per head, And if you're doing that, you're really doing well. Because when I run the numbers, if I got 250 a head,
And Mike, how long has it taken you to start tracking all these KPIs? Because I'm just going to put my accountant hat on for a second, because for all of you know, I'm not a CPA, but I pretend I am at times because I work with all of you. So I know what's going on in your head right now. And you're probably thinking, Michelle, that sounds overwhelming. We have a lot of work to do. We got a lot of clients. We're inundated with PPL and EIDL and recession hitting and businesses closing and some people are thriving. Like, Mike, how long did it take you to get to tracking everything you shared today? And for everyone who's slightly overwhelmed right now, I know the first one that everyone should track is the utilization. But what's the second one out of the 5 or 6 that you shared for the KPIs that someone should start tracking today, where it's not so overwhelming? Because you're doing all this now, but it's taking you some time.
Well, it's taken me some time to get clarity on the numbers because, most of your management systems, like if you're using office tools or you're putting your time in it, they'll give you utilization, right? So the thing is utilization, one of those things that if you have a common, like any accounting management practice will track utilization, they'll track realization. And again, it doesn't have to be 100% accurate as long as you're doing it consistent.
Yeah.
Like for about a year when we switched from QuickBooks, doing our time and billing in QuickBooks, to doing our time and billing in Office Tools, there was a little gap between what was being billed in Office Tools and what was being billed in QuickBooks that didn't take into account. But we've gotten that gap down to pretty much nothing, except if we have, and you kill me for saying this, bad debt.
No bad debt. And one other KPI you should all be tracking is your revenue. So that's another one.
Revenue per employee is easy. You take your monthly revenue, right? You multiply it by 12. You take your number of employees, which you should know. I mean, especially if you're a smaller practice, and you divide it into that number.
It might just be you. If you're a solo accountingpreneur, it's divided by 1.
Right. And then, so the thing is, but if you add someone, you should be trying to, get that 125 number. I mean,
minimum.
And that's, yes. And you'll be shocked. I mean, the thing is one of the amazing things is when you actually start delegating stuff and you actually start working with your clients, it's amazing the revenue will grow. I hired a guy. The first thing I did, I was a strategic coach, was hire a guy in my litigation practice. And literally, this was early on, my revenue went from like 250 to 500 the first year. And, and I was sitting there, again, I was very fortunate that it was a little tight labor market or loose labor market, whatever it is, where there were employees available. This guy didn't get a job out of college. And I hired him very cheap. Instantly realized how valuable it was, and over the course of a year was able to give him 6 raises and get him to where, but I lucked out on that, but I realized that, gosh, when I can delegate stuff and actually talk to clients, then,
your revenue and profitability just goes up.
And the perception of the client also helps. If you have people that you say, I tell people all the time, especially my older clients, I'm like, don't come in here at the last minute thinking I can do your return because I don't know how to do them anymore. I don't know, how to log on the software. And if you think I'm going to stay up till 9 o'clock trying to key it in, and the problem is I've got really spoiled employees. None of them are going to stay past maybe 5 o'clock or 6 o'clock. So get your crap in, right? Because the thing is those days are over. Most of these are very easy to do if you have any idea of what your total hours are. And you can do even standard, I'm saying, like
Excel spreadsheet. Just put it in an Excel spreadsheet and get it done. Or like you said, if you use Office Tools or one of the software, it's all in there.
And then you can just play with the numbers too. So you know where you are and what would happen if you moved it up, right? You know what I'm saying? And then that's where you can see the power. So, gosh almighty, I'm operating at this utilization, but if I got to this utilization, boom, I'm operating at this average hourly rate. If I got it to, there are firms out there that are getting $200 per working hour, right? Wow. To give you an idea, I think ours is like 85 or 90. So if you take all our employee hours and you multiply by $90, that comes up to our revenue. And we're a profitable firm. We've got, really high profit for, an average CP. We're above average.
Well,
But so
that's
you could
awesome.
imagine if I got to $200 an hour.
Well, that's your new goal. I'm gonna give you that new goal, and everyone listening, you need to get to a minimum of 125. At least start tracking one of these by next week. And again, if you track it wrong, that's okay. Just stay consistent. And Mike, thank you so much for being here with us today on the Abundant Accountant Podcast. It's always a pleasure and honor to have you here, and it was very insightful. And this is the most important time for everyone listening to really start tracking this. So thank you so much, Mike, for being here.
And thank you, Michelle.
Alrighty, what an amazing episode with Mike. I know your brains are probably very overloaded going, oh my gosh, Michelle, we can't handle any more work right now. But I think it's very important as you're entering or we're in a recession, whatever you choose to see the world as it is today, it's very important to measure your KPIs. So if you had to choose one, what's one that you can start tracking starting next week? But I have a bonus one for you to track because as you all know, revenue helps you bring on better staff, helps you give out bonuses. One of my most recent students just paid out bonuses. I think I talked about that on a previous episode. And what a great time to give and uplift your staff and your people a time for bonuses. And lastly, just a reminder, I have an 8-week sales mastery training coming up. So if you want to chat about that, make sure to book a call over at theabundantcall.com. We, my business partner and I, will help you build your dream practice so you have the time and money to maybe go on a vacation. You've spent all this time with your kids and family at home, and soon we're all going to be able to go on a vacation again. So have the funds to do that, not be frustrated and stressed trying to get the right referrals, and really actually having control over who you work with and how much you charge. Just like Mike. He said, double your rates. I can help you with the confidence on that. So if you want to explore and get to the truth of why that might not be happening for you, then let's chat. All I ask is that you've been an accountingpreneur for at least 2 years. So head on over to theabundantcall.com. I hope you all have a great day, and I'll chat with you soon. Today's episode was brought to you by Xero. Remember to visit Xero.com. That is Xero.com. Xero provides the tools and human touch to manage all the elements of your practice, including a dashboard with a clear and centralized financial overview, the ability to collaborate in real time with clients, smart customized reports with links to source transaction, and free 24/7 support. Once again, Xero.com, that's Xero.com.